Good afternoon, everybody. Uneducated Economist here. So in this video, we are going to be talking about the 4 key takeaways from the Federal Reserve's interest rate adjustment and the new statement that is coming out about the current situation we now face within the economy. Now, the number one obvious one is the lowering of interest rate. They cut interest rates by a quarter basis point, and they're ever closer to that neutral interest rate, which is the place that they truly want to be. That's the spot where they are neither accommodating nor restricting the economy. Now, this is something interesting to think about considering the next part of the statement, which is the economy has expanded at a moderate pace. And now this is very interesting to think about because at the exact same time, they're talking about in this statement about how the labor market is weakening. So now here you have an unemployment that is becoming a concern for the Federal Reserve as far as the unemployment rising. But at the same time, in this statement, they are talking about how it is the economy is expanding at a moderate pace. Now, these are two different economies taking place, right? The top 20% and them conducting themselves in a better fashion than the 80% of the people out there who are suffering at the bottom end of the line with elevated inflation and wages that aren't keeping up. And now it's obvious within the statement, right? When you hear it in this fashion, when you think about how it is that the economy has expanded at a moderate pace, you're thinking for who, right? Certainly not for those who are suffering with the low incomes or lesser incomes or even just paycheck to paycheck jobs. It doesn't even have to be that low anymore. You can have a good job and it not being enough. So these are two major takeaways that are being conducted right now within the economy, or at least through the mindset of the Federal Reserve and their interest rate setting policies, is that here you have the economy operating at a moderate pace, and you think, who is that? Could that possibly be? And then you go and you look at the stock market being elevated. You go and look at all these things out there that are happening within the economy that are then giving the top 20% the advantage over everybody else, or at least has them in an advantage comparatively to everybody else. I wouldn't necessarily go in over because everybody has a chance to be in the top 20% if they were disciplined to do it. Point being, it moves on to the next thing. And that is the Federal Reserve has done something that is really interesting, is that they have put out the forward guidance now of the policy adjustment. I'm sorry, not the policy adjustment, the policy of balance sheet adjustment when it comes to mortgage-backed securities. Now, the Federal Reserve had purchased a lot of mortgage-backed securities during the quantitative easing programs, and they were slowly allowing these mortgage-backed securities to fall off the balance sheet. So what that means is as the mortgage-backed security was getting paid, because it's much like a bond like anything else out there, when the mortgage-backed security was getting paid and got paid off, the Federal Reserve would take that money back and only allow so much of it to roll back into mortgage-backed securities. Otherwise, they were pulling a bunch of it off the balance sheet. So now what they are going to do is end that program, and essentially all the mortgage-backed securities that are becoming due are going to get rolled back into mortgage-backed securities. So this is the ending of the quantitative tightening. As they were allowing the reduction of these mortgage-backed securities on their balance sheet, they're going to end that program. Here's the thing. It's not going to happen until December. Right? But think about the credible threat of it happening and what that's going to mean for markets. So by the time they actually start to do the adjustment, the markets will have already priced it in. So today is the day that you have to look and think about that. How it is that the Federal Reserve has put out the credible threat of mortgage-backed securities unwinding, coming to an end, and what that will mean for the market, but it doesn't start taking place for yet a few months, or a little over a month. All right, last point, right? So we got the obvious inequality that has taken place within the Fed statement by saying the economy is expanding at a moderate pace while at the same time talking about the weakening labor market. That's all us paycheck to paycheck people who are living paycheck to paycheck, and what I was say livers. That's funny way of describing it. But that's all the people who are living paycheck to paycheck, trying to figure out how it is that they are going to come up with the ability to provide themselves with the retirement and college tuitions and bill paying and all the other stuff that goes with it, those are the people who are suffering with that unemployment rising, or at least a weak labor market, while at the same time the economy is expanding at a moderate pace. It's funny to hear. Getting down to the very last point, though, Myron asked for a 50 basis point cut. He dissented again. Everybody else on the FOMC asked for a 25 or voted for a 25 basis point cut. Myron went for a 50 basis point cut. Dissenting vote again. But he wasn't the only dissenting vote. There was another one as well, Schmidt, who said that they didn't need to cut at all. Very interesting to see how it is that these two particular Fed officials see it so differently. They're both on the FOMC, essentially counter each other out with one, like, I mean, Schmidt's vote wasn't even counted, and then Myron's really is, it doesn't matter when it comes to the FOMC and the rest of them voting at a quarter basis point. So, but it's interesting to think, okay, so here's one of them, and if they all have the same strategy in mind, let me kind of back it up here a little bit. If they all have the same strategy in mind, and that is to have the Fed funds rate at neutral, and they all agree that that's what they are attempting to do with their vote, and Myron sees a 50 basis point cut, while at the same time Schmidt sees a zero cut at all, in order to achieve that neutral interest rate. So what is it that Myron sees differently than Schmidt, right? Because I'm guessing that Myron is seeing a slowdown in the economy, recessionary factors, all the issues that were leading up to a low neutral interest rate environment are still prevalent within the economy, and I'm sure that he probably still sees those. Remember, Myron is the newest voting member to the FOMC. Now, on the other hand, what is it that we're actually seeing within the economy is elevated inflation. In fact, they even brought that up within the statement, that the concern of inflation has been elevated over the year, right? Has risen. Now, I'm only assuming that's due to the fact that we have such credible threat of tariffs that are now running rampant throughout the markets. To think about how that is elevated the inflation expectation, and essentially, which is a self-fulfilling prophecy, has raised the inflation itself, it makes sense that Schmidt would see the elevated inflation and inflation expectation would be one of the key indications of how it would be pulling the neutral interest rate higher. So these two can literally see opposite scenarios at the exact same time if you think about what it is that they are really focusing in on. See, to me, it makes sense that these two would actually disagree with each other, and to deliver that as a key component to the message of the mainstream media propagandized information, to actually make a point about these two dissenting votes being completely opposite. And we actually know this to be part of the monetary policy strategies coming from Philip Jefferson's speech. I don't have it in front of me, but he literally said it right in there, that when many Fed officials come out and disagree with each other, it makes for better policy, stimulating debate and better policy. And ultimately, by having such opposite and opposing views, it leaves the understanding of what it is that the Federal Reserve is attempting to do so open-ended. And that is how they are able to then use their propagandized information delivered through the mainstream media to then guide the markets in the direction they want. Just look at the mortgage-backed security thing right now. Watch it. It will then be priced into the markets almost immediately that they're going to be, ending this quantitative tightening, and that's going to be somehow a quantitative easing thing. I don't know what people are going to think. They're going to tell all kinds of weird stories about it. But ultimately, the market is going to start pricing this in so that by the time it actually starts to take place, there will be very little effect within the economy. Okay? Very little effect will happen. All right. Woohoo! 10 minutes. Man, that was pretty good, right? 10 minutes. See, a lot of people complain, man, I don't have time to sit around for 45 minutes. So I try to deliver all the information in the first 10 minutes. As much as I can anyway. Because, not everybody has time to sit around and have the conversation. All right, let's just kind of cruise it up here a little bit. We got Atticus now with PCUE. All right, damn me, lots of laughs. That's coming Laugh out loud. I mean, monkey, 32 monkey, 32 3. All right. Brody, thanks for being here. All nighter, thank you for being here, brother. All right, Brody says, hit the like on the way to the stream, please, everybody, because that will make YouTube share it more widely so we get more interesting questions in here. All right, let's cruise it down a little bit further. Let's see. Aluminium? I'm referring since 1913. Fiat being compared to fiat is not really a measurement. Aloha from Hawaii. Hey, financial firefighter. Thank you for joining in on today's live stream. All right. Good work, Simon. You forgot to mention I should buy, sell gold today, though. You know, that's just the thing. People ask me all the time, man, talk about gold, talk about silver, talk about copper, talk about all these things. And I'm thinking to myself, man, I don't know if people really like my message that I deliver when it comes to some of those things, because ultimately, when I look at precious metals, I look at them as an insurance policy against all the third-party risk and claims and everything else that's out there. When I think about it, I'm thinking, man, the last thing I want to do is get rid of it, right? I don't like, to me, going up in like a huge price doesn't really get me excited, except for that it makes me feel a little bit better about my insurance policy, but it doesn't get me excited to the thinking like, man, I'm going to unload all this silver. Not that I have that much, right? And it's unfortunate boating accident that took place yesterday. That means I have to reclaim all my silver, and I don't know if I can get it back, but you know, we'll try. But anyway, you know, ultimately it's an insurance policy, right? All right. Moving on. People don't give value in fiat. The government does. Try and pay your bills in groceries in crypto or precious metals. See what happens. People don't put the value in fiat that the government does. Yeah. Well, the thing is like once you recognize fiat currency as a currency and not as money, then it doesn't really have the, I don't know, like, to me, I don't look at it as something that is supposed to have value other than the ability to trade goods and services for other goods and services. And once I looked at it as only as that, it relieved me of a whole bunch of like blame and excuses and reasons and, you know, wants and needs and all this other stuff from this currency. I just kind of let it go. And I'm like, okay, fine. You're not going to do that, right? You're not going to hold value over time. Gotcha, right? So that means I have to be very strategic on what it is that I do. If I'm going to earn dollars, I better take my dollars and then deploy them to something that is going to have some sort of return going into the future if I don't want to buy things today with it, right? So understanding that to be the case, then just alleviates you of the problems that you would face by wanting it or needing it to hold value, right? It doesn't do it. We wish it did. It can't. It won't. All right. And so now that that's okay, great, it's gone. Now we can look at it much differently. We can say, okay, how is it that we figure out how to do business, investment, buy good things that are going to hold value over time or something? I don't know, right? Like you got to figure out your side, I figure out mine. Have you ever overlaid a chart of interest rates on top of the S&P? It seems like the lower rates after we hit the bottom. Well, I mean, you have to think like they lower rates. Okay. The Federal Reserve had a major issue taking place back after the great financial crisis. And I talk about this all the time, but this hasn't changed. Right? This issue that they had faced after the great financial crisis. They came into a situation in which that the adjustment of interest rates was not working for them. See, okay, let me see if I can. Typically, the Federal Reserve would lower interest rates to then get people to go out there and borrow money to buy houses and cars and go on vacation, the consumer. But that's not exactly right. What they would really do is lower interest rates to get corporations to borrow money to hire people. And that hiring of people would then increase the aggregate demand. More people working, more people consuming, that increases the aggregate demand. That's what the Federal Reserve would look for. Now, something broke down after the great financial crisis, and this is what they refer to as the flattening of the Phillips curve. Now, when the Fed lowered interest rates to zero and time went on, the unemployment fell to historically low numbers, like 50-year low. They looked out and said, holy moly, we're not getting the inflationary scenario that we would typically have seen with this incredibly low unemployment. Interest rates were at zero, unemployment was falling to his 50-year lows, and the inflationary scenario was not taking place. Many people will argue with that. That is fine. I understand. Asset prices went up. They recognized the irrational exuberance that went into the bond market, stock market, housing market. They saw all this taking place during those times. People want to point at that and say, there's the inflation. That is not what the Federal Reserve was looking for. They were looking for their inflationary numbers to increase above their 2% target, and it was failing them miserably. Miserably, they could not figure out how to lower the interest rates beyond zero because they would go into negative territory. They could not figure out how to lower unemployment anymore to spark the inflationary scenario. They were screwed. 2018, right? November of 2018, John Williams gives an incredible speech talking about it. Monetary policy strategies for a low neutral interest rate world, right? There are many other speeches that were given talking about this exact thing. How it is that the Federal Reserve had no more downward adjustment for interest rates. Ben Bernanke warned the people, the other central bankers, in a speech, deflation, making sure it doesn't happen here. That speech was given November of 2002. They knew the lower bound was coming, that the Fed funds rate would hit zero, and no more adjustment of interest rates would work. It was over. They figured out how it is to conduct monetary policy without the adjustment of interest rates. They figured out how to conduct monetary policy without the adjustment of interest rates. They use it through the deployment of words. I have said this so many times. This is so obvious to me now that I can call out the Federal Reserve and their actions way ahead of time, considering what it is that I was calling out within the lumber industry, what it was calling out for inflation, how it is that I was calling them out for the average inflation rate over time that they were looking to achieve to get the inflation expectation locked in at 2% over the long run. Raising that neutral interest rate, making the economy far less restricted. I mean, here we are, right? Got an economy expanding at a moderate pace for who? The top 20%. Who's been saying this the whole time? Who's been telling you that the paycheck to paycheck jobs are going to be increasing over time as the ability for the average day job to provide themselves with the American dream is now fading away due to the fact that we have ever increasing amounts of money that is pouring into the system, creating the inequality. This is taking place right now. Here it is, described very accurately from an essay that was given hundreds of years ago. And I don't know like how else to describe it for you guys. It's like I can't see it any clearer than this. You know, they will at some point attempt to produce a consumer here in the United States. The people themselves can't do it. They lower interest rates. They can't get the inflationary scenario from the unemployment being at a historically low level. The Phillips curve is broken. The Somme rule broke down. All those who are looking at the average American as being the key component to this economy is missing it. They are no longer the important component. You're important to make sure that you drive the truck, that you flip the burger, that you serve the beer, that you load up the 2x4s. right? That part you're important. But as far as being the consumer, there's nothing they can do for you anymore. You're not going to increase your consumption, right? Like they already tried that. They like your wages went up and they didn't work. The inequality got worse. And so as I see it, as I think about what it is that the Federal Reserve is trying to do right now with their monetary policy, they're trying to get the Fed funds rate to neutral. I will say it over and over again because that's what they're attempting to do. And now there's only two ways to really do it. They can lower the Fed funds rate to get to neutral, or elevated inflation expectations due to credible threats of what it is that's coming into the future will elevate that neutral interest rate as well. Those are the two things that they are doing. It seems very unlikely that anything else is going to happen. Once that Fed funds rate has achieved neutral, they will not move. Because the adjustment of interest rates is not the effective tool. They will talk about it. That's the thing, right? They will talk about it regularly, but so long as they got inflation locked in at 2% long-term, that 2% long-term objective, it doesn't matter where the inflation is today. It literally does not matter where it is today. So many people will say it does. Oh, they're trying to get to 2%. And I'm thinking, well, they have never achieved 2% in history of their existence. And I don't know why anybody would ever think that they can sit at a 2% target if they've never done it before. Never in the history of their time. So there's no reason to believe that they can do it into the future. Now, can they maintain an average inflation expectation of 2% over the long term? That seems to be what they are doing, right? Many Fed officials have come out over the years talking about the makeup strategy, letting the inflation run extra hot, extra long for an extended period of time. And you know what's interesting is they were making those statements prior to COVID, during a time in which that they had expanded the balance sheet from 850 billion to over 4.5 trillion, failing to produce that inflation. Like, how is it that they could possibly produce inflation lowering the interest rate? It didn't work for 10 years prior. It would be delusional to think that all of a sudden they can do it going into the future. But what does make inflation happen? Elevated inflation expectations, credible threat of tariffs, and the actual severing of supply chains. Stimulus packages just only help the matter. All right, how long can the top 20 maintain the economy? Will there be signs when they have reached the end of the catering to the top 20 and there will be the top 10% left? Oh, I mean, just think about it. Like how... I mean, just think about how difficult it is, right? Like, hold on, let me read the question again. How long can the top 20% maintain the economy? Now, I don't think they're going to rely on the top 20% to maintain the economy, right? Like, I don't think that this is something that they are relying on. I think it's just something that is now taking place. The top 20% are now the major consumer of the economy, right? That's it. They're the major ones. Now, as far as increasing consumption, how do you increase consumption throughout the broader economy? There was a time lowering interest rates would then spark the people to get a job, right? Because ultimately, corporations would start hiring. More people working, more people consuming. That's the way it used to work. But those people can go and get a job, have a really good job, and it won't matter because they're not going to increase the consumption. It doesn't work as far as increasing aggregate demand. So there's nothing that the Fed can do up there with their little magical powers as far as lowering interest rates to then create an environment in which that the average everyday job is producing the real goods and services that they could trade to the rest of the world to then give them a good standard of living. It's just not working like that. They have to trade whatever little scraps they get from the top 20%. Which I know is really strange for a lot of people to try and internalize. I mean, I know it's really difficult to try and get that, but that's really what's coming down to it. So how do you increase consumption amongst the general population out there if you cannot give them a better job? It's like they can't. If they don't have assets, bonds, real estate, right? Who has that stuff? The top 20%. So if they don't have those things, they have to have a job that pays enough for them to increase their consumption that is fading away. They have to have something else. What could that possibly be? UBI, right? Producing a consumer. That's the only way they can do it. Otherwise, the whole system is literally relying on increased aggregate demand. They didn't design it so that the 20% would be the only ones doing it. This now separation is causing that to be the case. Okay? See, there was an awesome time when we as American hardworking individuals could buy a house, fill that house with all the wonderful stuff, couches and dishes and all the fixtures and all the stuff. And when we were doing that with our day jobs, we were buying all that stuff from ourselves. You're right. This is what was happening. We were buying all this stuff from ourselves, which gave us the ability to then have that trade-off between each other. I mean, you think about it, if you could go down to the wrecking yard and pick up a car, tow that car home and piece it back together, how available are vehicles? They would be quite prevalent, right? Everybody could have, like, you just go down to the wrecker, you go get one that's been damaged and you piece it back together. Kids used to do this all the time. This was how they used to get their cars. They would fix up an old beater. Nowadays, that isn't necessarily the case unless you can find an old Suburban or something to work on. Most of the time, the vehicles nowadays is not going to be something that you can do that with. So now, if you have a 16-year-old kid who picked up a wrecker who could then fix up that car and say, hey, I will trade it to my sister if she wants to buy it from her waitressing job over this course of the summer. Because that could be an equal trade. His time fixing it up could be equally traded for her time working as a waitress. And she could own a car. Fairly easily doing that. Because this was a common thing that used to take place. But now that availability isn't there. Who has the availability to buy a car? Somebody who has $50,000 or willing to make 8 years worth of payments. That's it. Those are the only people who are going to have a new car. And so when you think about that, who has the ability to buy a new car? Either the rich or somebody who is going to take out debt to buy a luxurious experience. That's it. Separation between the rich and the poor right there. Having the ability to produce a car yourself, or going down to that wrecker and making it happen, and then being able to trade that with somebody of equal skill, right? Whereas it's not there anymore. Being a service industry or being a service economy where all you're doing is essentially trading foreign production to each other, how is it that you could possibly increase the aggregate demand within the people themselves if that's the case that they're facing, in which that they are not producing goods and services out there that they can trade to the rest of the world? It's not happening. It's not going to happen. I don't know. Moving on. 224 people, thank you so much for joining in on today's live stream. We have about another 10 minutes left here, and we got 56 likes. Go and hit that like button. By hitting the like button, YouTube will pick up the video and spread it around for more people. All right, could the WEF Klaus Schwab be predicting the future rather than forcing the future? Eat the bugs because all other protein is too expensive for the working class. Well, there you go. All right, now you're starting to see it. How is it like, I mean, if you are, oh gosh, it's like Greenspan said it best. They, like that little statement talking about how they can pay any debt of any size to any degree going into the future, but they cannot promise its purchasing power if you do not produce the real assets. Now, producing the real assets is the major problem we now face here in the United States. because even the production of the real assets that we were selling to the rest of the world is becoming very cumbersome. It becomes very difficult for us to then produce the things that we need and produce it in a way that we can supply ourselves and supply the rest of the world in a profitable, competitive way. They are producing it and selling it to us because we have increased our standard of living, and we have too much demand for a high standard of living in order to compete against somebody who is willing to sleep on the ground. Like, we need a house, we need the car, we need the education, we need all these things in order to maintain our life. And somebody else out there is willing to do what you are doing, and they're gonna sleep in a hut on the ground, right? Or whatever. All right. I think demographics have something to do with it. A young population not willing to participate, as it were, as they are disillusioned with things as they currently are. Atticus now, I don't blame them, right? I don't blame them. See, there was a time inside of this country in which the average day job was enough. Now, I mean, it shouldn't say that it's not enough. You could probably make it with an average day job. The only problem is it's going to be a horrible existence, right? You'll barely make it. It'll be a struggle every single month to month to month trying to get by, right? And it'll be that way for your entire life. Now, there was a time in this country that there was a lot of manufacturing jobs, or at least the jobs that were paying would then provide a reasonable income that if you were somewhat disciplined, you could have a decent life. It wasn't like it was that hard. But now we are sitting here trying to say, oh, the kids just don't care, they don't try, they don't want to, or something of that nature. And I'm thinking, well, if you were given the task of having to be put on this planet and saying, hey man, go and figure it out, because we all had to figure it out, and then you gave them a strategy that was failing, they just don't care. They don't try hard enough. They don't have, the ambition. And it was just like, I don't think that's necessarily the case. We live in an incredibly luxurious country here. We have the ability to have all this wealth, food, conveniences, pleasures, right? They all run rampant through this country. We really take it for granted that we are producing very little comparatively to what it is that we consume, and how it is that we are trading the production, hard work, energy, everything that's taken place outside of this nation. We are consuming that with an empty paper promise to pay into the future. And I think, man, what kind of living condition would that possibly exist inside of the United States if you weren't depending on having a good manufacturing job? That good manufacturing job is what gave us the ability to have a strong savings economy. It doesn't exist nowadays. So to say, hey kid, go out there, start hustling, and then figure out how it is that you're going to make it in this world where you're not really in an economy that is a producing saving economy, but you're in a debtor consumer economy. So figure that out, right? Can't be a producer saver anymore. Don't try that. You're going to fail. That's not the economy we're in today. Figure it out differently. How are you going to do that? So now the kid has to think, well, I have to have multiple streams of income. I have to figure out how it is that I'm going to deploy my efforts into rental property, stocks, businesses, all these other things, because that day job won't be enough. It's not going to do it. Like, it might be enough just to cut it, right? But if you want any kind of decent existence after that, that kid is going to have to get super intelligent. They're going to have to be online hustlers. They're going to have multiple incomes. They're going to have to be investors. They're going to have to know how it is that they can participate inside of a way that is more than anybody else that's around them, because that's who they're competing against. And they're going to put themselves on the other side of the wedge. And then people are going to say, oh man, he's lucky. Right? When if he doesn't do that and he's waiting on his day job to be enough, the wedge gets further and further and further away. That's the unfortunate circumstance we now live in today. So, I mean, kids are going to do it. There's going to be some kids who go out there who do exactly how I described it. They never even saw this video. They just know that they're going to have to do something. They're going to run out there and they're going to make it happen. There's other kids who are going to fall in line with what it is that their parents have told them. Work hard, struggle along, be dedicated to your job, show up every day, and then anticipate that that job is going to be enough going into the future, and they're going to fail. They're going to be looking back going, man, how come the Democrats did that to me? How come the Republicans are so greedy? How come? And they're never going to look at it and saying, oh man, we are now inside of an understanding of economic forces that is separating the rich from the poor in a dramatic fashion. And if I don't take my extra money, the money beyond the money I'm already making, and deploy that towards something that is going to have a significant return going into the future, then I can expect to stay on the bottom side of the wedge. This is the case. Look at the statement. The economy has expanded at a moderate pace, while at the same time unemployment is rising amongst the lower class, not necessarily the lower class, lesser income individuals. It doesn't even matter. There's not even like a lower class individual who's suffering here. It's everybody. Even good jobs suck. All right. Am I got to go yet? Yeah, I got like 3 minutes left here. All right, so basically, many of the youth are suffering in the sins of their fathers, continuing on a poor financial decisions. Absolutely, and that's what. Here's the thing: it's not the problem of the condition of which we are in today with the economy. It's the problem of the condition of the mindset in which we are wanting the economy to be. It's not up to it's not up to us to determine what the economy out there should be. It's up to us to figure out how it is we conduct ourselves inside of it. And that is the key to understanding all this stuff. And as most people are screaming, man, these day jobs suck, you're absolutely right. And they're not going to get any better. But there is a billion opportunities out there to go out there and make some sort of money doing something, right? There is availability of money out there everywhere. It flies everywhere. You just have to learn how to reach out there and grab it. And a lot of times people just say, man, I don't know how to do that. And it's not exactly easy if you're not in the mindset of doing it. Once you go and get $1, just learn how to make $1 off the internet. Just focus in on that. It doesn't matter how much it is. It's a matter of being in the energy of being able to acquire $1, because if you can do it once, you can do it twice and 4 times and 8 times and on and on. And this is the key to it, is to know that your first initial efforts of building this major thing comes brick by brick, and the first brick doesn't mean anything, but it's the most important one. Right? It's the most important one, because without that first one that you're setting there, you're never going to set the second one there. So it's a matter of going down each one, putting down each one as you do it. And sometimes that effort takes years. You know how many videos I had to put out here on YouTube before I ever started getting paid for it? It was a lot. I did a lot of videos on YouTube. Each one of those was another brick. Right? Another brick. I didn't anticipate the money that I was going to make from it. I anticipated building something that I thought was going to be a really wonderful thing. And that is to be able to discuss economics from the working class point of view, and I totally got it, and it's working. This is how we do it. Right? And from that, I was able to get a decent amount of abundance that has come from it. And to be honest with you guys, I'd never really even tried. It wasn't a matter of trying to do that. The trying to get the money was like the last thing on my mind. You know, it was always about trying to put out a good video, trying to go out there and pursue what the next right thing is in sort of my own life, and then going out there and trying to figure out how this monetary policy, literally from how it works from a working class point of view, to deliver that message. And man, here we are. You know. All right, good day on the markets. Also made at the casino. This is an awesome day. All right. Right on, JK. Alrighty, guys, what time is it? Yeah, I gots to go. Thank you so much for being here. We got 234 people watching. Do me a favor, go hit that like button before you exit out of the live stream. That's going to be the best and easiest way to support the Uneducated Economist. And I want to thank everybody who's been sharing the video. It's very noticeable inside of the video algorithm when the video starts to get shared. I appreciate it. Thank you so much for everybody who's trying to support the Uneducated Economist in this fashion. I don't even know how to even describe this. But essentially, like, I just don't know what else I would be doing with my life other than doing this with you guys. So thank you so much for being here for this, all right? And for all the support. All right, Uneducated Economist, you guys let me know.